Good morning. This is Marshall Gidler bringing you the morning comment for September 4th. The question for the day is, how can two countries that aren't fighting have a ceasefire? The news of a permanent ceasefire in Ukraine has buoyed markets, but as the Russian side pointed out, how can they agree to a ceasefire when they were never in Ukraine to begin with? I'd wait to have the ceasefire independently verified before jumping on the peace trade. However, that was not the way the market saw it, and assets affected by the Ukraine tension saw significant moves yesterday, like Russian stocks and the ruble. The Polish zloty gained even after central bank Governor Marek Belka said that rate cuts were very probable, a turnaround from what she said just in July. Oil also rose on hopes of faster economic activity in Europe. Yet gold gained. I would say the adage, don't count your chickens before they hatch, is applicable here. NATO is discussing what to do, and EU ambassadors are meeting to discuss EU proposals for sanctions on Russia. If they decide to go ahead with sanctions anyway, then Russia may decide not to honor the ceasefire. We have a very busy day today, which started out earlier with the Bank of Japan meeting and continues with 3 more of the G10 central banks holding policy meetings today. Sweden's Riksbank is the first to meet during the European Day, following its unexpected 50 basis point cut in early July, and given that the country's economics really haven't improved much since then, we might see some additional action from the Nordic Central Bank. That could be negative for the Swedish krona. In the UK, the Bank of England is unlikely to change policy, and therefore the impact on the market should be minimal, as usual. Last is the most important, the ECB. After the recent poor economic data from the euro area, along with President Draghi's comments on inflation expectations at the Jackson Hole event, these have raised expectations that they may take some further action. I expect at least further clarification at the press conference about the likelihood of purchases of asset-backed securities. In line with Draghi's comments that the committee will acknowledge the change in inflation expectations. As for the indicators, German factory orders for July are expected to rebound from June. In the U.S., the ADP employment report, one day ahead of the non-farm payrolls release, is expected to show that the private sector gained 220,000 jobs in August. So that's slightly more than it did last month. A number in line with expectations or higher would suggest robust growth in jobs, which should be positive for the dollar. For more information, including technical analysis, please read the full comment on IronFX.com. You can also follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google+ to get more trading ideas. This is Marshall Gidler, Head of Global FX Strategy at IronFX Global, wishing you solid trading.